What's up, traders? Chris Capri here, SecondSkiesForex.com, where we change the way you think, trade, and perform. I got a live trade setup video for you here on the Euro Canadian dollar. I am short, which you can see this is a live trade and the prices are moving right now. I'm short at 58.72. It's currently at 55.21, so I'm up about plus 350 pips. My stop loss is at 59.45 and my limit is 52.25. I have marked all these lines on the chart, but you can see that this is a live trade right now. You can also see that this is with my live account. If this was a demo account, this would say simulation, but it's not. It has numbers, so it's showing that this is a live account and I'm trading with my own money. What we're going to do with this trade right now is talk about what was the price action context and framework and patterns that I had used to make this trading decision, get into this trade, why I chose my stop loss and my take profit, so that you can see exactly how I'm trading with my own money and how I can teach you how to find these exact same trades and make profitable trades as well. So let's get into this chart a little bit further. Okay, so we're looking at the 4-hour chart on the Euro Canadian right now. This line marks my entry rate over here. This marks my stop loss. My take profit is way down here. As I said before, I'm in at 58.72. My stop is 59.45, so roughly a 73 pip stop. And I have my target at 52.25, so about 650 pips profit potential or a plus 9R. Currently, I'm up about 350 pips of profit, so I'm up about plus 5R at this point. And so I'm going to start to talk about what was kind of the main underlying price action context and pattern that I saw that made me want to get short on this, choose the trade location, and my stop loss placement. So the EuroCAD had kind of this bullish breakout in February this year and a massive run up from 55 up to 61. It then started to encounter some aggressive counter trend impulsive selling, which it found a base around 57.5, and then buyers came back in with a really strong force here, made marginally new highs, and formed a kind of false break above those highs right about here. So the prior highs before this were about here. They had a little bit of a pop above it, and then they sold off aggressively after that. Now, when we look at this kind of strong impulsive counter trend pullback and then the impulsive buying that happened through that, we can see it was a very strong amount of buying. It was very fast. It was a very strong angle. But then when the market sold off and started to find buyers again, we noticed that there was a little bit less enthusiasm this time around. So it was a much kind of, and you can kind of see it a little bit more on a 1-hour chart. But you can see it took a little bit more time to bottom here than it did here, whereas here it just kind of stopped and then found aggressive buying fast. Here it took a little bit more time to find buyers and a bottom. But then we look at, it comes back to this same kind of support area over here. And look at the bounce after hitting this here. Look at the bounce since then. It's incredibly weak. It's this weak corrective bounce. Instead of the prior bounces, which were impulsive, boom, boom. This one, there's no boom. It's just kind of moves sideways. And that kind of hinted to me the changing in the angles of the price action and the bounces and the impulsive moves suggested that there was a lot less enthusiasm for buying this. In fact, there really were no buyers to be found at this prior support. The market then kind of spikes up outside of this. Let me draw this kind of corrective structure here that I was looking at. So I was looking at this corrective structure at the time. The market's kind of bouncing in here. It has a brief 1-hour spike above it. Then a couple hours later, it sells right back into it. And so to me, that looked like, based upon the movement from here to here, if this is a bearish trend from here to here, this looked kind of like a with trend false break setup to me. So I decided to, after this kind of sold back here and got into the middle, I decided to sell that because I felt like, okay, this corrective structure was holding. It bounced, spiked above it, and then came right back in it. Probable false break setup. And so I want to get bearish on this pair and look for a bigger move down in it. So that was my entry, 58.72. Ideally, I would have liked to have gotten a little bit higher towards the top end of this corrective structure. just because of timing and everything in my time zone. That's when I got into it. My stop loss was right here. So I took this spike, put it just a little bit above it, and that was it. 70 pip stop on a potential 650 pips of profit. Now, I know there's a lot of trading educators out there that are saying you need to have bigger stop sizes, you need to increase your stops, you need to have large stop sizes. Some of that's true, but then some of it's not. You don't need to capture, like right now I'm at 350 pips of profit. You don't need to have some giant 100, 200 pip stop just to capture a 350 pip move. Stop size should be based upon A, where you think the market shouldn't go if your trade idea is correct. And for me, that was above this spike. But then also stop size should be based on one other important factor, which I'm going to talk about next week. And that's based upon the second thing, which is your precision in being able to call a good trade location and find out, okay, what's the absolute minimum that I would allow this to go against me, where I feel like, okay, if it goes no more than 70 pips, if it goes 70 pips or more, that is the first point that I want to get out of this. There is a precision that you build in finding good stop losses, and that comes with time. So the answer to you should always have larger stop losses versus small ones, it's not a black and white thing. In the beginning, generally, yes, but as you get better and better and you get more and more experience over time, your stop losses should continually get smaller and smaller, which is something we teach our members to do. And that's why you can have a trade that's 350 pips in profit like I have now and do it with only a 70 pip stop and be at plus 5R. So that will increase your profitability dramatically over time. And we're going to explore this concept of stop losses, how tight, how loose should they be, where do I recommend it on next week's article. So stay tuned for that. But this is how I chose my stop loss for this particular trade. That's my video for today. That's my lesson on price action context and stop loss and how I choose my entry, my trade location, my stop loss, and take profit. If you like to find setups like this for yourself on a regular basis, week in, week out, if you want to learn how I trade live with my own money, if you want to learn strategies like this to be able to find trades like this without confirmation signals which reduce your accuracy and profitability, then check out my price action course at secondskiesforex.com, which is, we have thousands of members. We've shown our members make money trading. I've shown I make money trading with verified results. So if you want to learn with me and you want to learn how to find trades like this where you can get 350 pip winners with only 70 pip stops and plus 5R, then check us out, secondskiesforex.com, my price action course. Other than that, I look forward to your comments and questions on this. I look forward to your feedback on this, what you learned from that. Until then, good luck trading. I hope you've been profiting from all the good trade setups lately, and I'll see you in the next video.